a lot of people, a lot of smart people too, surprisingly, like we're basing the future of blockchain games on a few just completely broken assumptions that games should make you money, that chasing high yields is wise, that ramping up scholars makes any sense whatsoever.
Hi friends, welcome to the Metacast Roundtable by Naavik, and today is a special episode because we're going to be taking a look at what's happened in the games industry in the first half of 2022, looping in some predictions, and it's extra special because we're joined not one, but by two Naavik co-founders, 2 out of 2, by the way, Aaron Bush and Abhimanyu Kumar. Welcome.
Thanks, Maria.
Hey guys.
Okay,
it's
well,
actually probably like our first episode together.
In a long time, at least.
Did we do the first episode ever of the Metacast together?
I think maybe we did the first one ever, but now we're on like episode, I don't even know what episode number we're on at this point, like 100 or something. So maybe every 100 episodes we'll get back together.
Are we on episode 100? No way.
No.
We're pretty close to that, I bet.
Are you counting the Crypto Corner segment?
Yeah, just like all the podcast episodes. Yeah, we're probably on like roundtable number like 50, something like that.
50,
right?
Okay.
I was good. 56.
56, yeah.
56.
Yeah.
An annual occurrence.
Yeah, so
maybe when we hit 100, we should we should definitely know when we hit 100 and then we'll do something.
That'll be a special episode.
I'll let you all know. I keep track of this. I'm the accountant of the episodes. It's 4th of July because we're pre-recording, holidays and summer, and we thought it was a good time to look back to what happened. But I wanted to say it's 4th of July because, Aaron, you live in the United States, right?
I do. I don't think there's too much to celebrate in the U.S. lately, to be honest. But it's still, it's still a good excuse to, hang out with family, have fun with friends, all of that. So, still trying to have a good time.
Yeah, our
play
fireworks.
Some Apex Mobile.
Yeah, I need to do that. That's true.
Are fireworks still a thing on 4th of July?
Oh yeah, it's like definitely all over the place. There's going to be a ton of fireworks.
Did you get some? Is it legal? Should I be asking you this on live?
In most places, it is not legal to just shoot off fireworks in the suburbs, things like that. But some people definitely do. But
some people that do not include Aaron, by the way.
Yeah, that do not include me. Also, fireworks are expensive. I think fireworks are it's one of those things that it's like one of my personal pet peeves that I'm never going to ever spend like $1 on. Because the good fireworks, they cost, like hundreds of dollars. And then all you do is blow it up. You're literally lighting money on fire. You're literally just blowing up money. And I cannot get behind that. So it's okay. I even feel weird, all right, tax dollars go into just literally blowing things up in the sky. I feel weird about that. And I get some people like it, okay. But never going to come out of my bank account to fund fireworks.
So I don't like fireworks for more like the environmental reason. I never thought about it in terms of, burning up money. But yeah, the environmental reason is super important for me because I'm coming from India. We have this one festival called Diwali, which is a festival of lights. And that's like a firework extravaganza, but where basically neighborhoods are competing with each other on who can burn up more money the fastest. And yeah, I mean, basically at the end of the festival, Delhi, which is the capital, is just covered with a cloud of smoke and smog, and it's quite bad.
I thought you were going to say it hits birds or something. But yeah, I guess smoke and smog.
No, there are no birds anymore because the birds don't want to fly around in all the smog. So, it's clear skies for the neighborhoods.
Oh man! Well, happy 4th of July.
Yeah. Wow, New Year's Eve will never be the same.
Yeah.
Looking at this burning money.
Yeah. I used to like it when I was a kid. I did burst some fireworks then, but then I stopped.
Yeah, I used to like it until I had a dog. and then the dog wasn't very happy.
Yep, same here.
So then I got unhappy. But it's still really nice, fireworks, very pretty.
Once in a while.
And, if you are not buying fireworks, there's something else that you can do with your saved money, and that's become a member of Naavik Pro.
What a transition.
What a transition. What a transition.
I know. This is going down the worst.
Reading that pro analysis content is going to result in fireworks in your mind.
Gosh, that was so terrible. Okay, let's quickly move on from this embarrassment. Aaron, what's the first big beat that you have for us today?
Yeah, so let me pull up my notes real fast. So I think there are plenty of pretty big trends and narratives that have shifted gears over the first half of the year pretty heavily. So I think it's worth highlighting, what those are and, why we've seen so much evolution and change in such a short period of time. And, one obvious contender as a trend that's changed heavily this year is M&A, mergers and acquisitions. So, I think 2022 has technically broken records for games industry M&A because January was insane. That's when, Microsoft announced its acquisition of Activision, which still might not go through. It probably will. But that was about a $70 billion deal. That was also when Take-Two acquired or announced the acquisition of Zynga, and that was about like a $12 billion deal. And then I don't know if this was in January, but shortly after, Bungie announced its $3.6 billion acquisition of Bungie, etc. And, since then, we have not seen anything like that. And part of that has to do with, well, there are only so many Activision, Blizzards, and Zyngas that can be purchased. But really more than that, there's just been like a pretty, real change in capital markets that just change the logic of how these kinds of deals get thought through and made. And so, capital is more expensive now. We're already seeing interest rates rise. So if companies need to take out debt to make deals, it's just more expensive for them to do that. A lot of big acquisitions, like we saw with even Take-Two and Zynga, they're used with company stock. And when prices in the stock market's doing well and prices are higher, it's usually more compelling for companies to leverage their shares at higher prices to acquire other companies, often at lower prices. But when lots of stock prices are down across the board, it's less intriguing as a value proposition for companies to sell stock to buy other companies. And so there are a couple like really important levers right there that that are less appealing than they were, even 6 months ago. And when you kind of pair that on with just more economic slowdowns or concerns, or just recognizing that maybe the same level of growth that was forecasted maybe was too ambitious, and therefore like companies need to cut back. Also, just cash in general is something that companies are not just tossing out as freely as they might once have. And so when it just comes to like the nature of like how capital works and what makes it compelling to use or not, it's just become less compelling over the past 6 months. Also, like there have just been, ongoing structural changes in the market as well. So when it comes to something like mobile, companies just have to be more careful buying into mobile, given a lot of the, the UA and LTV destabilization that we've seen with, privacy changes like IDFA. I think even when you kind of look beyond that, it's just the question of like who is left to like make these big acquisitions that would actually want to at this point in time. And it's just harder to answer that question right now. And it doesn't mean that we won't see it, but it'll probably be at different terms, and it'll probably not be as crazy of size. And it might even be different types of buyers that are in the mix. So instead of, just random company out there looking to buy another company to grow, it could be, more like private equity and things like that now that companies need to cut back, their economics have changed, and there's just more challenges to think through. So really in general, just M&A has changed, and that in and of itself is a symptom of like broader underlying changes. But it's been pretty crazy to see how we went from breaking records at such an extreme level to cutting back down and kind of changing the trajectory of how we should even think about M&A as an industry. So I guess those are my thoughts, and I guess I'm curious, as you think about the landscape, is there, I guess, first of all, do you agree with me that M&A should be cut back down probably from the highs that we saw? And if we are to see M&A over the second half of the year, where are we most likely to see it? Like, where makes the most sense to see companies continue to buy up other companies or not?
Yeah, I mean, I think in terms of like these huge M&A deals, we're probably probably Q1 was the Q1 was filled with the most fireworks. um, but yeah, I think going forward, at least M&A at that scale is probably not going to be happening for some time. So I agree with that. I guess the one question I did have though is more in terms of like we wrote this article in Naavik Pro about the consolidator companies like Stillfront and Embracer, and basically connecting it back to this point that you just made about when if your public market stock price is priced quite low, then using that as a lever to fund future M&A basically has become a weak lever. So for these companies, that's my like one concern. Like, okay, what happens to the strategy of these companies where they now like really need to double down on the studios that they have acquired and the tech that they have built and the processes they have in place to essentially now build games in house. So that whole organic growth aspect of things for these companies is now it's really going to like rear its ugly head, and it's going to become like really really important for these companies, I would say. So but yeah, I don't know, like how do you kind of like think about that aspect of things with these consolidator companies?
Yeah, well, I think growth by acquisition is always, there's always risk inherent in that model when you're growing just from however you allocate capital, raise money, sell stock, things like that, and that's your source of growth more so than like internal reinvestment on like high like return on investment activities that generates organic growth. And I think we see plenty of examples over time of companies that have been serial acquirers, like outside of gaming too. And it works because they're just really smart with managing money, but also they're really smart in terms of the quality of the assets that they buy. And so when and there are certain time periods where it makes more sense to like lean in and lean out or just change how you think about acquisition. The problem is like you need to have flexibility like built into your model so that if you press the brakes, it doesn't screw you over. And so when I look at some of these companies like Stillfront and Embracer, there really was like a positive feedback loop in play where they would use stock to acquire companies to get short term burst of growth, which would then push their stock price up even more, and they could sell even more stock, and they're a larger company and therefore they can take on more debt. And there was this positive feedback cycle on the way up that let them like accelerate growth by acquisition. But as with all things in markets, like it never, like the market dynamics never stay the same, and so they're going to change. And so the problem with that model is that when the market changed, they weren't equipped to really deal with that change. And so now we see some of these companies that their stock price has fallen. Now they can't use their stock as effectively to make deals. Now their growth, their acquisition driven growth is lower, which makes the growth expectations of the company lower, which makes the stock price and company value fall even more, which if they have lots of
Mm-hmm.
debt and stuff already, it just makes the company more inflexible to using
Mm-hmm.
capital to be more flexible. Like they can't, take on a lot more debt. They can't necessarily sell more stock. So they're just a bit more stuck. And at that point,
Mm-hmm.
it's like the main determinant is like, did you do a good job in buying the assets that you did? in a way where that's going to contribute to the trajectory of your company's expansion. And I think with a lot, if you kind of look back at a lot of the companies that Stillfront and Embracer and others like it bought, it hasn't necessarily led to the level of organic growth that they would have wanted. I think the idea of like just synergies between these studios is probably, it doesn't really exist all that much. Like there are probably little things here and there you can say like, oh, leverage this game engine to grow, or leverage this brand in another studio to make another game and not have to pay a licensing fee, or something like that. But
Or
it's not.
localizing different games for different
Yeah.
markets where these studios are strong. Yeah.
So I think there is a little bit to like organic growth that is there, but there's not like a huge like organic growth reinvestment engine that really exists to take these companies to the next level. And we've seen that through really weak organic growth over the past year. And that's not, the whole industry has been kind of struggling with organic growth. So it's not just them, but when your entire economic model hinges on, like, you have to make lots of deals, and if that goes away, the deals that you have made need to carry the company forward to new heights. That's a lot harder. And in a case like Stillfront, which is like very like mobile centric, that's been really hard. Something like Embracer maybe is a bit more interesting, just from the sense of like they're not even just a games company anymore. And so they bought, Asmodee, which, is a big leader in board games. They bought, I think it was Dark Horse Comics, which just has a ton of IPs to work with. And some of those things, like, you can make the case that organic growth could actually be more feasible than just throwing a bunch of studios together, because you can leverage talent, connect it to like the board game industry, and like actually innovate in some way and build something new that kind of pushes forward that industry meaningfully, or take all of these new IPs that you now own and do something like unlock some value in them that couldn't have been unlocked before. But I still don't know if that really moves the needle enough for these companies. So I think they could be good businesses, but the assumptions that were made about their economic growth by acquisition economic models, it was just way too high. And as soon as that unravels, those assumptions and forecasts just plummet. And that's why we've seen these companies, Stillfront probably most of all, just get hit so hard. So I think it's really interesting. It's a fascinating model, but there's a lot to it that you need to be really careful about as you build it up, as to not, completely collapse on the way back down.
Yeah.
The underlying business model, does it not have an expectation that eventually the growth by acquisition will plateau or slow down significantly? Because building a business model that requires good market conditions for years and years and years, like, that's not how market cycles really work.
Yeah. And I think a lot of people were forecasting probably incorrectly on how that would go across like the entire stock market too. Like, we've seen like a pretty huge reset in expectations, like across the entire global stock market. But yeah, companies like this that definitely hit the most. And what gets challenging too is like, I think it's like these companies don't want to admit it. And so, and their commentary to investors in the market, they're not saying that they're going to do less deals or that growth by acquisition is going to become a smaller driver. They want to forecast higher growth and figure out how to continue to make that growth engine intact. But the challenge for these companies is you either have to do one or two or both things. One, at a larger size, you need to make more acquisitions to get the same amount of growth, more smaller acquisitions. And then it's just, you're probably taking more of a shotgun approach, and it's harder to get the same level of quality if you're making, 5 times more the number of acquisitions. That, or you need to make larger acquisitions. And when you make larger deals, it's just more complicated because you're betting more of the company. You're putting more of the company on the line to make sure it happens. But then the integration complexity and risk are just so much higher that if you screw anything up or it's not as quality as you thought, that in and of itself, one bad big deal can mess up the entire acquisition engine for many years as you kind of dig yourself out of that. So I think for these companies looking forward, they'll continue to do M&A and such. But I'm hoping they can like really rethink the types of companies and kind of the quality of companies that they buy so that they can really get that organic growth engine more in check. And that's easier said than done, and it might not happen. But that's the thing that would take these companies to the next level and make them really interesting. Not recession proof necessarily or anything like that, but to stop the positive feedback loop that works so well on the way up from crashing on the way down.
Yeah, I guess and like the big acquisitions part is even harder when the stock price is where it is right now. Just to kind of like look back at Stillfront story a little bit and back up a lot of what Aaron is saying over here. But I mean, Stillfront kind of started with these. I guess it was like 4 different companies coming together, and one of the key problems that they wanted to solve was essentially by providing basically scale advantages to smaller companies. They end up providing more stability to stock market investors to essentially invest in Stillfront, for example. What I mean by that is they would go ahead and like purchase companies that have long-standing games that are running on pretty old user bases but are generating pretty decent amounts of money, and then you add them all up, and at the end of the day you have a pretty stable revenue trajectory that's predictable for the market, and through live ops and better user acquisition techniques, etc., you're able to essentially grow those revenues pretty predictably. Now the problem, or at least the way I see it, is that the companies that they did end up purchasing that actually had these games were, I wouldn't say they were like tier A studios. So they would be somewhere in between tier A to tier B studios, and even though like those studios have found success with the games that they have built in the past, but to then create the next game, which would be the source of organic growth, I mean, they're competing against like some pretty well equipped and well staffed and very highly experienced tier A studios in the market, and that's just it's just very hard in mobile games, as we all kind of know, to just find that next hit. So now Stillfront is left with basically a bunch of different studios who all have they've proved themselves in the past, but now they have to prove themselves again in a even more competitive market. But they are I would say they're not all like tier A studios, which makes the whole organic growth thing and basically finding the next hit game even harder. But that's like Stillfront specifically. On the flip side, you have Embracer, which I mean, they've been like super crazy with their acquisitions, right? I mean, not just like PC console studios, but they also like starting to get into mobile a little bit, and they have the comic book stuff and the board game stuff. But Embracer also has something like 250 different projects in the pipeline and whatnot, and basically the shots on goal that they have to find that lightning in a bottle, again, the same way that they probably did with Valheim. I mean, that at least they have like more shots on goal. I don't think I actually haven't like checked Stillfront's latest presentation, but I don't think they have even those many attempts, to kind of find that next big hit. So maybe Embracer is at a better place for finding that organic growth internally through those through 250 shots on goal. But yeah, I mean, at the end of the day, the fundamental issues between these companies still remains the same.
Mm-hmm. And just to wrap up this topic quickly before we move on to the next one, if I had to guess, if we see large M&A over the next 6 months or so, it's not going to come from the big game publishers or even just like the big game platforms like Xbox, Sony, Nintendo. Nintendo doesn't really acquire. Sony, well, I mean, it has like its acquisition strategy to kind of do like tuck-in studios and things like that. And then, Xbox has its hands full with Activision. So I would guess that if we were to see larger deals, it would probably be from like the other like big entertainment and tech companies that are a bit more cash rich. These are like lower probability of occurring, but these are like the companies of scale that probably would want to have something to do with gaming at a larger level. So like it's probably not going to happen, but like a Disney coming in and deciding it wants to remake, gaming as a larger pillar of its business with, its new CEO, trying to, stake his legacy, or, Amazon, like who we know wants to build out its gaming ecosystem, having a ton of capital and basically being able to buy like most anything and it barely moved the needle for how big that company is. So those are the kinds of places where I would expect in this stage where the bigger deals could come. We could see more private equity pop in and things like that as some companies struggle and need to cut back on spending and all of that, which isn't super exciting. I don't know if that's super healthy for the industry, but we could see maybe a bit more of that occur. But anyways, it's just been wild to see how quickly the gears have shifted and sentiment has changed around M&A.
Yeah, maybe one last quick comment. So, like to go back to your question about where the next M&A could come from. There's obviously like what you said about the bigger media companies trying to like make really big gaming company purchases. Some other places which I'm curious to get your guys' thoughts also. But one other place could be all these companies that went public during the COVID rise. So, like Playtika or ironSource, and basically they were riding that wave so hard that they also like ended up going public, but now they're really not in a healthy spot. And also all these companies that like when like SPAC'd, if that's the way to say it, but the companies that SPAC'd, like Nexters. I mean, I don't even have to like check where like what's up with Nexters, but I mean that company was built on one game and it went for the SPAC deal, and I mean now I don't know what's happening to it. I feel like those there could be like some consolidation happening or like some buying up happening of those companies.
Playtika got I don't know if it's a majority stake, but a big stake in the company was acquired by Joffer Capital, which is like a tech investment company.
Yeah. Yeah, Joffrey Capital. That was the news. So it was curious. Like I was also listening to Aaron's interview with Eric Kress, and Kress said that it's fake news. That piece of it didn't really like also pick up in various other websites. So maybe it is. But anyway, the other area I felt that there could be some M&A happening is because of so because of IDFA and basically more inefficient UA kind of taking over the market, there are still a lot of private studios that are focused on genres that heavily depend on targeted UA that are probably not seeing the efficiency that they can over there, and those two could still be like good targets at this point, especially for bigger companies that have the cash balance, to kind of make those deals. So at least, yeah, those would. I still feel like Playrix is up for grabs, but yeah, I don't know. What do you guys think about those two areas of more M&A?
Yeah, I mean, I think it could happen. I don't think it would happen at great terms for those companies. Those are companies that some of them, they probably went public when they shouldn't have, at prices that they could only get away with, at the top of an economic and market cycle. And so having to reset, either they're just going to get crushed, and many of them have already been crushed in public markets, which just means like, do you want to continue going down this path and get just roasted every quarter as a public company, or do you want to find an out and just kind of regroup while private? And so I think it is possible that happens quite a bit, and it won't be really worth celebrating when it does, but it'll be more of like a cleanup operations, reorient and streamline, all of those kinds of things. But yeah, feasible. Yeah. Nothing industry moving, but yeah, I guess a sign of the times.
Well, this ties nicely into the second big beat that you brought.
Yeah. So I need to figure out how to focus this topic, but basically, like, we've been talking about the economic cycle has turned a bit more recessionary, or it looks like it's probably heading in that direction. The market itself is obviously well off of its highs, and it's had different impacts on different companies. A lot of the more like growth oriented companies that had really high expectations, they've been hit the most, while others that are stronger, more predictable cash flow generating businesses, they've still taken a price cut, but they're not taking nearly as much of a beating as just where expectations were really high with other companies. But um, it's also been striking, kind of similar to how I said in M&A, how it went from just like really heavy M&A to just a complete like change in sentiment that's had ripple effects in M&A. I think we're also seeing that same thing just play out like within companies as they think about their own spending, as they think about their own hiring, as they think about their own forecasting to various extents. And this creates a lot of ripple effects. And it's hard to overgeneralize this, but I guess to just kind of hit on some things at a high level. Obviously, many investors have been crushed. It started in the public markets, but I guarantee you it's trickling into private markets now too, since the price of private companies is at least partially dictated by whatever exit opportunities they have, which is more dictated by public prices. We've seen the IPO markets slow for obvious reasons. SPACs are basically dead. So we're not really seeing any more of those happen right now. VC investment is slowing despite, record capital being on the sidelines. Part of that is just, VCs are they're just trying to figure out like what prices make sense to have deals on, especially in later stages, seed stage, where companies are just getting started. That's being affected less, but more at the growth stages, it's being affected a bit more, where the prices really are more dependent on public comps and things like that. And in general, like the market is pricing companies less just based on their ability to grow, which a lot of those growth assumptions have anyways been put into check, but also just higher emphasis on generating profits. And so it's sort of a 1-2 punch of when growth expectations, probably get pulled back a little bit while the emphasis on profits gets higher. It leads to layoffs, and we've seen quite a bit of those trickle in over the past month as companies like Unity and AppLovin, et cetera, announce layoffs, which you hate to see. But still will probably that trend will still probably continue for a while in certain places. It leads to companies like we discussed in the last, or maybe it was 2 roundtables ago, where we discussed, how companies, even big companies with tons of cash like Meta, they're cutting back on lots of different projects, and companies are just getting more focused on what they know can work and when. And as we said, it could lead to more private equity getting involved. I think the strongest companies are probably still going to get hit the least by the need for layoffs, need for refocusing, things like that. And it's just these smaller companies, some of them who have IPO'd over the past couple of years or so, the Robloxes, the Unities, those kinds of companies. They're the ones who are, dealing with, a lot of the economic and market changes, dynamics, growth forecast changes, having to rethink how they prioritize, the growth in their own businesses and such. So again, been really interesting to see how quickly sentiment has shifted across not just like the market and how deals get done, but how companies themselves are prioritizing, how they run their own businesses and have to think about financing and all of that kind of thing. So I just wanted to highlight that. It's a big topic, but I wanted to, throw out there and just see, based on what Maria and Manu, what you both see out there, are there areas that you think are like you do see getting hit harder more than most, or you think could continue to like get hit hard in the next quarter or so, or even the opposite, and areas you still feel pretty strongly about that you just don't have concerns about? Curious to hear what you think.
Yeah, at least on my side, And this probably like funnels into one of the topics I want to talk about, which is the basically the fall of the of various blockchain games, or better called Ponzi-nomic games. Um, but yeah, that's like one clear area where things have really fallen off a cliff. Basically, all the different game tokens are down, about 80 to 90% each. It's absolutely crazy if you check out like some of these, DAP Radar or L2Y.com. I mean, everything is just basically that there was a spike in mid 2021, and everyone was like enjoying that spike, and all the graphs just kind of look the same. Right now it's either they're back to their early 2021 levels, or even lower than that. And some of the key and just to like give some examples, but like Steppen's GMP coin, that's like down 80%. Axie Infinity with its AXS coin is down 91%, and this is all compared to like their all-time highs. Krabada's Kra coin is down 99%. Pegaxi, which was basically Axie Infinity but with mech unicorns, is down another 98%. So, I mean, yeah, it's like a complete bloodbath. Key drivers, at least in my mind, of course, like there's just like the overall crypto market downturn that's affecting a lot of this. But at the end of the day, yeah, all of these games, the way that they were built, they just essentially relied a lot on new players kind of coming in and bringing new capital into the system that can be redistributed to everyone else, basically promising to everyone else that there can be like financial gains if you engage in this product. But therein, and therefore like a lot of hype driven value and things like that. But therein kind of lies the inherent problem with all of these games, which was they're just not inherently fun, and therefore there is no incentive for some of these players to engage with them long term. But it also shows that how much of the player base, or at least in my eyes, it kind of shows how much of the player base was actually driven by a bunch of speculators and or people who were just in it to kind of get the financial gains, which just comes back to the point of how important it is to actually build a fun product first. On top of that, I also feel at least like the first wave of these crypto games was also built by a lot of teams, which I would classify as maybe more on the inexperienced side when it comes to like building games. More like crypto heavy teams who understood like more of the crypto side of the equation, but not really the game side of the equation too well. Anyway, all of that has kind of like culminated into what we're basically the complete annihilation of the blockchain gaming market quite recently. But yeah, the big question then remains, or what everyone is kind of asking is, is this the end of blockchain gaming? But I would say I don't think so, and I definitely hope not. At least in my mind, what has happened in this first wave is, or probably the biggest thing that's happened in my mind is more people from the traditional games industry have been convinced that there is something here. So there is something to explore over here, and I think a lot of games industry people also think we can probably do it better than how it was done. So that big talent migration, it's definitely started, and it will continue to happen over time. Now, when the talent migration happens, these are people, basically a lot of like free to play game designers, and definitely from more traditional PC console side of things. I mean, the free to play game designers definitely know how to like build economies. The only difference, and probably a big difference, is they were mostly like building closed economies versus now wanting to build an open economy, which is a pretty different undertaking. But still, at the end of the day, versus like the teams that were building the first wave of games, this is definitely a way more experienced talent pool that's going to be building the second wave of games. and that's why I kind of feel that yeah, for blockchain gaming, it's still not over. Uh, and there's the best is yet to come, is what I would say
Mm-hmm.
for it, because the second wave of crypto games is on the horizon, built by teams that know more what they're doing, than some of the teams in the past. And yeah, I'm still like excited to see, what those games end up looking like.
I agree that it's not dead. But Manu, don't call us traditional games. It's so sad. We're not traditional. Makes you feel so old.
Oh man.
Oh man, I mean, I'm
As
right there with you. I'm calling myself old.
as painful as it is, the crypto winter, as it's been coined, I think it's one of the best things that could have happened to the space, because it will force builders to build great games and not focus on Ponzonomics. And if it's not, it can't even happen. So you'll have to pay your attention to developing a fun game. My prediction is that over the next couple of years, the Web3, true ownership, permissionless, custodial, like all of these keywords, I think they'll die down, at least in the general communication scheme. And I believe we're going to go back to, okay, what kind of game do we want to design? What audience is out there? What economy? What fun? What features do we need to build the vision that we have for this game, and prototype ideas and validate? And I think you won't be designing a game to be Web3. You won't be designing a game because you want true ownership. Because like the mass audience, do they really care about true ownership? What does true ownership mean? Do you? But if you
I
say,
would,
oh,
I would,
if
I would
you,
argue, I would argue, yes. Like, of all the terms that you said, the ownership one is probably the one I would argue will actually continue.
but is
But
it true ownership, or is it you can cash out if you stop playing, or if you achieve something great, you can sell it and get some money for what you've invested in? Because like ownership has so many satellite meanings around it. And I think if we start talking about more, these are just game design decisions at the end of the day. And depending on your game design, you're going to need different tech in order to achieve it. And I think blockchain will become one of these technologies, and we'll see publishing platforms bridging this gap of what you can plug in and play, and so that studios don't have to be developing, I don't know, like account systems that link with wallets, or
yeah,
how do you withdraw, and how do you connect your wallet. Like eventually all of these things will just be refined, and
yeah, yeah,
games
I agree
game
with that.
developer, yeah.
Yeah, I think like all those, basically all the problems that are being focused on right now, with like probably the topmost one is, oh, it's such a headache to like connect my wallet to the game. I mean, all of those things will go into the background. But and I actually personally, I don't even like calling it blockchain gaming, to be honest, because the blockchain part is really the tech that's enabling
Mm-hmm.
something bigger. And for me, that bigger thing is the ownership aspect of this, because that's not really like existed in the games industry before. And in for this model to actually like, this is more like getting into my thesis for, blockchain gaming. Uh, but for that model to actually have legs really long term for the next 10, 20, 30, 50 years, for it's really more about like unlocking this new value vector of ownership for players, which is not like been there before. Now what that means, to your point, it could actually mean many different things. For some players it could mean like, flipping assets. For some players it could mean like actual ownership, which results in, I don't know, if interoperability ever ends up happening in between games, where they're able to like transfer their assets between games. I mean, people at the end of the day also like play games for like 5 years and then they get bored. But after you've invested like 2,000, 3,000, 5,000 USD into that one game account, you want to like do something with it, right? Or I don't know, give it to your little brother so that he can continue or something. So I mean, I feel like the definition of ownership could be actually pretty wide ranging and not just narrowly focused on making a profit off of it. But at the end of the day, that's really the new thing that's coming to the table, or not coming to the table, but that's really the new thing that, this first wave of crypto gaming or blockchain gaming has probably shown to the rest of the industry that, okay, the gaming population is actually values virtual assets, and therefore ownership could be a thing that, you know, like we build a business on or we actually sell. So,
Yeah.
but yeah.
It's where you don't sell keywords to a mass audience, and that's why I think that's going to be the next step, and that this crypto winter will take us there faster. You're going to start selling game design loops and features that you have nowadays, like match 3, 4x, whatever it is, and it'll just become a new kind of game that you develop and players like. I don't think the grand majority of an audience will play just because it's Web3 or just because you have ownership. It'll be by the consequences rather than the keywords that we tell them.
Yeah, I mean, I could see a world where, you know, one player is shown one MMO, a free to play MMORPG, and an ownership enabled MMORPG, and he doesn't know which is which. But maybe the question that he asks is, "Oh, so do I own my assets here or not?" You know, like maybe you're not selling keywords, but that feature could definitely exist where it just becomes important that, okay, if I'm going to be spending money on this game,
yeah,
will I actually like end up, are they really mine or not? You know, I could see that kind of thinking like permeate the broader market for sure.
Definitely. And I think it already exists in that sub market. That's not with the terms and conditions of games. If you're investing 100 hours in making a super awesome character that's extremely powerful because you did all the right things, can I sell it? Can I pass it on to someone else? Yeah, it's not dead.
I guess I think we'll definitely see. There's obviously something there. It'll play out in a million different ways as tons of different developers continue to try things out and learn and improve. I do just want to like double underline how much stupidity we've seen over the past year, though. And it is worth being super critical of just what we've seen play out in blockchain games so far. So, you know, like a main thing to say is that like obviously the bear market is part of what is driven the declines, but that would have happened anyways. It only made it go faster than it would have. And, you know, in my view, like we are at like a pretty important transition point in the era of blockchain games. I do think the first era was probably driven more by like crypto kitties, which flamed out because Ethereum wasn't scalable. Now, you know, the most recent era, which was driven by Axie Infinity, it was made possible because blockchains became more scalable. But its Achilles heel was the economic model that, you know, just everyone copied and jumped into. And, you know, this past bull cycle was, you know, it was mostly fluff. It was built more on, you know, false economic beliefs than anything fundamental at all. And so, for example, the only reason guilds exist, and therefore a lot of the emerging infrastructure around them exist, is because one, Axie used a breeding mechanic for Axies that made barriers to entry high. Barriers to entry don't always have to be high because you don't have to always use that breeding mechanic. Two, the Ponzi-nomics, you know, made the point of the game financial earnings instead of fun, which we talked about. And then a ton of people just copied these mechanics and built a ton of different things. A ton of different people piled in. And so, you know, a lot of people, a lot of smart people too, surprisingly, like we're basing the future of blockchain games on a few just completely broken assumptions that games should make you money, that chasing high yields is wise, that ramping up scholars makes any sense whatsoever. And, you know, anyone with an understanding of just like basic economics will tell you that games where people that, you know, where people are there to make money defies any laws of economics and math. High yields for products like this have no chance of being sustainable. And, you know, therefore the entire premise of why most guilds were even built and why scholars ever made any sense whatsoever, it just makes less and less sense. And it was turbocharged, you know, because, you know, similar to what I said with like the positive feedback loop of like the growth by acquisition model with traditional companies, like this is just another positive feedback loop based on like greed and a lack of like fundamental thinking. But it just got so wild, right? Like people were talking about games solving basic universal income or universal basic income, and you know the Axie documentary, like people like ran with that and believed that there was like something of substance there. And yeah, like it's just like all of these beliefs, they just need a huge reset. Um, and not just of prices, but of priorities, right? And so, the next era of blockchain games, which hopefully, starts now, it should use a lot of the same tenets, hopefully some semblance of player owned economies, unlocking composability in new ways, leveraging like, we looked at Dark Forest recently. I think Lars talked about on the podcast. They unlocked, zero knowledge proofs, like interesting, like privacy technologies to do something new that hadn't been done before, completely on chain. Like that is the direction things obviously have to go. So I think the next 6 months, like Ponzi-nomics, like it's still gonna have a fallout. There's still like people putting a ton of money into projects. There are more guilds than ever that are still chasing the scholar model, even though it makes like generally no sense. Like maybe in a few cases it makes like barely sense if you kind of think about it more like traditional esports. But I think, guilds will become more like VCs and hedge funds. The act of like having some type of scholar operation is probably going to get like removed from a bunch of guilds, just because managing money and managing scholars, like they butt heads a lot when you think about it. And yeah, I really hope the next 6 to 12 months, teams just like completely reset on priorities, as you've all been saying. Hopefully, the next era is one of fun. If the first era was just based on like, nothing could really happen because there was no scalability, but people realized that like, oh, we can own things. And the second one was based on scalability, but on wrong models. Hopefully, the next one can be scalability on right models that actually look like games, and we can actually get like past this bottom of the hype cycle up towards whatever the new highs are going to be. But man, when you look back, it's wild, all the things that people believed. So hopefully we can move past that real fast and move on to fundamental thinking.
I think that's innovation, though. When something new and disruptive appears,
No,
I think
it's
if you just
stupid.
look back at other big, well,
Because there's innovation.
when
but,
something,
like,
It's just
no,
stupid.
but when something,
there's innovation
there's
in technology,
patterns.
but when innovation and technology gets start interpreted as like innovation in finance, that's when all the red flags should go off, because the fundamental beliefs, people were turning some technology into some like economic model that made no sense. That is not innovation. Those things were solved hundreds of years ago. And so it's more that, yeah, it was just like investment in the wrong areas just because something was possible for the first time. I don't think that's innovation. I think that's taking a big step backwards before you take a step forwards. Even though it brings a lot of people, brings a lot of capital, starts bringing a lot of talent, like that's all good. But if it's all being built for the wrong reasons, I'm not so sure that I wouldn't classify that as innovation if it's not actually something that's going to stick.
I see your point. I really see your point. I don't fully agree with it.
I think there's a mix.
Because
I'll give that.
Yeah. Because the origin of blockchain was originally as a financial product, from what I understand it. At least the first time I got in contact with it was, maybe 5 years ago when I worked in fintech.
But should it be games though?
Sorry, but wait.
Sorry.
I think this all will make sense, because the builders who brought that innovation into games, that's the first application where it came from. And so you have that financial mindset. I'm not surprised that we applied the principles that existed within already like crypto markets and those, sorry for the term, I think they're called shit coins, where you just pump and dump. And if you come from that mindset and that knowledgeable, I don't know, like area, you bring that into games. And that's why it was the first iteration of its usage. And you have like dreamers who think that it's going to be the next and only thing and it's going to change the world. And then you have big skeptics who believe that it will not mean anything and it's just a Ponzi scheme that is bad for humanity. And, we look at AI. AI, kind of similar, but it comes from more of a scientific data background. And so it went to, we're going to create these machines with AI and they're going to be amazing. And then you have the skeptics, which are, oh, AI is going to take over our jobs and we're not going to have anything to do. And then time progresses and people just start converging into the middle, and you start losing the predominant noise of these two polar opposites, and you converge into more of that middle ground. And I think
Actually,
we'll also see that in crypto gaming.
yeah, the way I interpreted your innovation point was more asking ourselves the question whether crypto or blockchain gaming had to fall in these holes for us to reach an evolved way of thinking. Of like basically to realize the future that or the to realize the what's the word the ideal future of these games and player owned economies. The question could be asked, a hypothetical one, that did we actually have to go through this first wave? Because I mean, it is undeniable the amount the entire industry, including us, have learned about how to build, like what works and what doesn't work, with these games. In hindsight, of course, everyone can kind of point out and say that okay, this was shit and this doesn't make sense, and things like that. But I mean, yeah, when you're building, then I mean, it's basically everyone is just standing on the shoulders of each other and like trying to reach the next future. So at least that's how I interpreted your innovation point.
Yeah. Sorry for cutting you off, Maria. I guess
it's okay. It was a good discussion.
Yeah, I think the hype cycle, you see it across all technologies. AI, whatever. Like it's just always there. But with crypto, it gets turbocharged because it's financial, and so like there's money on the line. And so I do think like technically the answer is yes to answer your question, Manu. Like, could we have gone through this cycle without having to make these pitfalls? Like the answer is yes, we absolutely could have. But is it realistic? The answer is probably no, because human greed and psychology, like it's like the backbone of like every financial bubble ever. And this was a financial bubble. And I do think like, we actually like as Naavik, we did a pretty good job, catching on to just some of the BS early. Like, without knowing all the answers, you can at least point out things that are major red flags. Like it defies common sense that everybody who plays a game can just make a lot of money. Like how? Where does the money come from? Or that it solves universal basic income? Like, come on, no way. But I do think like there still is innovation here. I mean, I forgot the main point I was going to say, but man, maybe it'll come back to me.
Maybe we want to plug Naavik Pro again.
I was
fireworks, but
brain fireworks.
But, I was just saying, like, it's just something I've been like really triggered about lately, because we've gone through this. Like, there's no excuse for people to not have these lessons by now. Like, we know Ponzi-nomics are a thing. We know they're unsustainable. It's been pointed out so many times across the internet that like these types of models, they're going to fall apart on you. And if you're a guild or whatever, like if you play with fire long enough, you will get burnt. And so just following like people on Twitter and stuff, I still see guilds like they're still involved in, like Axie Infinity and like projects that they're just trying to like milk these games for money. And I'm just like, what are you doing? Like, you're focusing on all the wrong things right now. Like, you have to, like, if you want to survive, you have to reorient. If you like keep on doing what worked before but clearly doesn't work now, like you're not going to get anywhere. And so I've just been pretty worked up about like, man, like people just need to freaking pay attention and learn. Like if you're still investing in Ponzi-nomics, like you shouldn't be managing anybody's money like whatsoever. Like just stop. So anyways, sorry, I was getting worked up because of all that. Didn't mean to cut you off. I think
this is officially like Aaron's first rant on the podcast.
Congrats, Aaron.
Okay. Fireworks, boom, 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 boom. But yeah, I totally agree, man. Like that, like people not, I think I mentioned it on a previous podcast also. I didn't have like, this much of a rant about it, but just getting again triggered by the fact that people are just not, learning from hindsight, or just like looking back at things and, building something different based on learnings from previous projects, or how the market is actually moving, and trying to understand like why things are happening. It's definitely a point that kind of irritates me too. I have the same impressions when I'm like lurking on Twitter and looking at like different people's tweets. But
which all goes to say
yeah,
the bottom,
if you guys,
the bottom is an N. Like the bottom is not N because there's still people out here like being stupid, and so like that,
But
like,
it's never
yeah,
it's never going away. It's just humanity. If there's a way to make fast money, people will try to do it. And you still have pyramid schemes, you still have Ponzonomics happening outside of games. If as long as it exists and it's possible, there will be someone trying it. So I don't think we'll ever see it completely eradicated.
yeah.
We might just see consumers becoming less risk averse, making better
hopefully.
choices.
I want to see the scales tip because there always will be, unless like regulation hits a lot harder, which is very, very possible, if not probable, that it will. And a lot of these assets are going to start treated like securities, like a stock or something like that. But yeah, I just want to see the skills tip. These kinds of things will always be here. And even with like normal games, like even if a team gives it its best shot, it doesn't necessarily mean that it will work or that the economy will sustain itself if people don't stick around. Like all games go through some type of life cycle. And so that's inevitable. But yeah, that tilt towards fun games, it could not happen sooner. And yeah, props to everybody who's building out there.
I'm waiting.
God, please hurry up. We all need you. We all need you to come out now.
I think you need to do a Twitter cleanup. I did one this weekend where I started following way too many people in groups because I wanted to learn more about crypto gaming, and now I'm cutting back because I'm smarter about things, and I'm cutting back whose content I read because not all content on Twitter is great or truthful or that you should actually take away as a learning. So maybe Aaron, do a little Twitter
time for a Twitter
spring cleaning.
Maybe I
Twitter
should.
cleanup.
We're going to go a little bit over, but I wanted to talk about the big beat that I brought today. So it's really, really important. And my prediction is that we're going to start seeing more studios being founded by founders who are more diverse. And the reason for that is if we look at what happened this year and in 2021 is that we've already started seeing some leading indicators, I believe, that this is going to pick up pace. So, for example, we're seeing more promotions of diverse professionals into leadership positions. And then naturally, the next step up is to go and co-found or found your own company. The diversity of thought is becoming critical to address the market. And I think game companies that don't start building in diversity in their leadership will start to struggle. If you look at the mobile game audience, over 50% now are female gamers. And you need to have teams that understand the diversity of thought and needs. And I think there's just growing dissatisfaction with the status quo. And I think that will bring diverse founders together to go and develop their own companies. So, for example, some of the examples that we have: Trail Mix, extremely successful game, diverse founders; Unseen Studio, which I'm still super hyped about, founded by Kumi Nakamura in Tokyo.
What are they doing, by the way? That studio.
Unseen.
Yeah.
Not sure yet. I'm still hyped about the trailer. But it's great.
Okay.
I have to look into it further. I did a quick search, but I didn't see any more details. They're probably still a bit in stealth mode. Glow Up Games, Lumi Interactive, fine. There's just some examples out there, and I think we're going to see more. And hopefully, we'll also start seeing more diversity in venture capital, because I think we need that in order to accelerate this prediction. Because we need to start betting on founders that don't only have a long trail of big brand companies on their CV. And I'm not saying that, I'm not saying that you shouldn't do that, but we need to give more opportunities to founders that can deliver like professional outcome results and not expect founders to have been, 10, 15, 20 years in the industry with some big names to support the reliability of them.
Yeah, I mean, I think it's all super important. And I hope we are seeing signs that there is progress. You gave a lot of examples of more diverse founders. And, looking at, you hate to see it, but even just like what we've seen in like Activision Blizzard, where, there was a whole lot of problems that came to the surface and it caused, a lot of change. I think, seeing more big companies kind of clean up their act will be, a good it's a good first step for others to kind of follow, best practices that form at bigger companies and such. But yeah, I mean, I've said before that like I think it's really important to have diversity in every layer of the stack, meaning that like even like diversity and inclusion is to some degree self-reinforcing if you have it across teams and across leadership levels. Like in game design, you need to design for diverse audiences. So it's good to have diverse people with diverse mindsets. And marketing, you're selling to diverse audiences. So it's good to have diverse people working on that with diverse mindsets. In the C-suite, you're leading for diverse employees. So you need like good diversity and inclusion there. And yeah, as you said, Maria, like investors, like that's like a huge backbone of determining who gets a leg up in building the future of games. And it's just important to have, that mentality there too. And, if you can kind of solve for it at every layer of the stack, it should move more in the right direction. And sometimes it's maybe easier said than done, but it still is worth doing, and it's worth measuring for and making it, more of a priority. So I think it is super important. And I think I've also said this before, maybe a few months ago, but I really like the DIBS like mentality, which is diversity, inclusion, belonging, success, which basically means that like diversity doesn't matter if people don't feel like they're included. Inclusion doesn't matter if they don't feel like they belong, and belonging doesn't matter if it doesn't actually lead to success. And so as you measure and try to solve across everything for more diversity and inclusion, you really have to measure it based on the success that diverse people can see. Otherwise, maybe you've made some progress, but it's not the level of progress that really should be accepted. And obviously, like even at Naavik, we have a ton of work to do, and we struggle sometimes on it, but it's important, and we want to measure ourselves based on it. And I hope a ton of other companies are thinking the same way.
Yeah, and I think as we start seeing some of these companies, for example, Trailmix, and there'll be many more examples to come, just become extremely successful, that will also inspire you see yourself and you can think, oh, maybe I can do it too. Maybe I can take the step. But when I was preparing for this topic, I scrolled through a lot of VC firms and just looking at who they have as investors. I just get intimidated. I don't know. Like I just don't believe when I see who are the investors. Like they're great people. I know some investors, they're amazing. It's just like that mental block, just because of society and what you experience in your day-to-day life. If you don't see yourself reflected, you just get that that gut instinct of, oh, can I? Maybe. So we'll
yeah, I think
we'll see.
I think there's a big opportunity for another. I mean, I don't know if we need yet another venture firm necessarily. There's a lot of money flowing around in games, but for a team to like specialize more in supporting diversity and such, and making sure that a lot of people who might not feel as comfortable having seats at the table elsewhere or don't get listened to as well, like they have more of like a first stop where they can go to, and they're always heard, listened to, people understand them better, etc. I think there's something to unlock there that would be really interesting, and ideally it takes place across all venture companies, but if it's slow to do that, then having a more specialized team or something, it might just be good to have.
I feel we're really at probably like the start of a big like snowball effect happening for more and more diversity over the next 25 years. I mean, gaming traditionally, gaming is still a pretty young industry, and it has been male dominated. That's just the fact. The people who end up making the games are also, there's a good chunk of them who have actually gone on to start up the games focused funds and those VCs, or become like the partners at already established funds like the A16Zs and whatnot. But I mean, just talking about like females then specifically, like they have now started to enter the industry in the workforce at an increased rate, and we'll start to see that like percolate across like different aspects of the gaming value chain over time. And that's why I kind of say that we're probably at like the start of the snowball. So, and everything that you said, Maria, I mean that makes a lot of sense. And what Aaron also was saying about all these different parts of the companies need like that. How did he say it? Diverse people with diverse mindsets. Is that what he said?
I think.
But yeah. So
yeah, I think even if it doesn't happen because it should happen, it's a good thing. I think it will happen because the market will require it. If you have a diverse audience, you need a team that understands diverse thought.
Yeah, if there are more diverse
right,
founders, those are the people who turn into diverse investors in the future. A little bit.
And you're also right. Like the more that the rest of the market starts to see these, like the way you did, you went on to like these VC websites and checked out their team. Probably a lot of those were like male-dominated teams, but you start to see like more females over there. It inspires the next generation of investors specifically.
We talk about gender, but like all pillars really of diversity, color. There's just so
definitely.
much to improve overall. But we'll see it. The market will drive us to it, if nothing else.
I'm optimistic for sure.
Yeah, me too. Can I add one more quick topic, Maria, before we close up? I'll make it really fast.
Yeah, go for it.
Okay, cool. So I had a third topic prepared for today that the first two were kind of negative. Like they were basically just like, hey, a lot has changed in the first half of the year. And it's basically things from being up to going down, which it's not fun to see. It's not fun to live through. And I still think the rest of the year, like there still are going to be some challenges here and there, but there is like one area of strength that I did want to highlight. Eric Kress, in my interview with him, he kind of pointed it out. And I think the last roundtable, I think the opposite was said, and I kind of like disagreed with maybe how it was portrayed. But I think, bottom line, I think, console is going to be like a really bright spot for the industry in the rest of the year, simply just because, other parts of the industry, they still have issues that they're sorting through. We talked about crypto issues. Everybody knows like mobile with user acquisition. There are just some structural issues that have an impact on economics at play, et cetera. And stock market down affects, companies like Unity, Roblox, et cetera. But console, we're still so early in the console, like the new console cycle. There's still so much pent up demand and from supply chain issues, and just demand being in general, that I think like if you're looking for a bright spot in the industry that's going to continue to excel, no matter what we really see in the economy or whatever structural issues appear, like this is it. Like even in PC, it's not going to be as strong because, PC sales have been having issues. If you look at GPUs, inventories are starting to stockpile, prices are starting to get slashed. But console demand is still way, way, way higher than supply. And all of these companies, I mean, Sony first and foremost, Nintendo too, Xbox is a little weirder with Game Pass, but the new games that they're going to be publishing over the next 6-12 months, they're going to be super well received on larger install bases and like platform bases than ever before. So anyways, we talked about a lot of negative stuff today, but this is one bright spot that I'm like pretty excited about, both as a consumer and, just as a business person, to continue to grow and perform really well, even if, recessionary environments get worse. Console's going to hold up all right.
But yeah, just to clarify, but you mean both like the hardware and the content side of it, both of them are going to be like the bright spot for console?
Hardware, absolutely, for sure. Software, I think. I think the answer is yes. There are going to be some spots where like it always just depends what games come out that kind of like determines like some lumpiness there, and we haven't really seen economic like recessions hit when like software as a service or just like more like digital transactions are as prominent, and so we'll see. But even if you look at like changes PlayStation has made recently with like its new tiered approach to subscriptions and things like that, like that's another tailwind of like improving LTV on an enormous user base that it's going to have on its back, even if things get worse. So yeah, from a hardware side, I feel good. From like just like a base level services standpoint, I feel pretty good. And games, I haven't thought too much of just about like the full pipeline, how that adds up to sales. But the main games that do come out, they're going to be very, very well received, I think. So I feel pretty good all the way around on that.
Nice. I still need to get myself an Xbox and the Xbox Game Pass. So there'll be like one customer contribution from my side to Aaron's prediction.
Nice.
I might start playing more console with the subscription of PlayStation. I don't know. I'm still into my mobile. We'll see.
Yeah. But what do you, maybe this is the last question to wrap it up. But what are you guys playing right now?
I'm still on Off-Road Unchained, fighting those leaderboards.
I need to play that game.
It's so good. I don't know. I can't stop playing it. And Diablo Immortal, still getting through that. How about you, Aaron?
Yeah, on mobile, Diablo Immortal and Apex Mobile, first and foremost. Mainly, but the mobile games to play is mainly determined by what we're deconstructing in Naavik Pro next, and those are the next two. And so that's where I've been spending some time. But on console, I'm a little late.
Purpose.
Yeah, on console, I'm a little late, but I'm finally digging into Elden Ring. And screaming at my TV a lot. Yeah, but
oh my god.
Yeah, but it's a great game. I love it. I wasn't a huge like Souls fan, so I didn't think I would like it as much as I did, but I like it quite a bit. It's nice.
Nice. I'm like still super heavy into Apex Mobile, so I just hit like level 44 and in the Platinum 3 League or something like that. And
oh wow.
I mean, yeah, I don't know. I every time I get like 20 minutes of a break, I'm basically just like playing a game. I made some new friends. You know, they're part of my squad. I'm actually going to send out a link on the Naavik Slack today to kind of join the Naavik guild in it, so then we can all play together.
Nice.
And the other game that I just discovered is this game called Stumble Guys. I was actually looking at one of the topics that we didn't actually have time to talk about was, just like the drop in mobile game spending and the whole IDFA thing. Now, just looking at some of the data to see, okay, where is that drop coming from? And I noticed that hyper casual is actually up 24% in its IAP spending year on year in Q2 of this year. And then I looked into, okay, like what games actually contributing to that? And this one game came up called Stumble Guys. And I was like, that sounds like eerily similar to Fall Guys.
Yeah.
and then I downloaded it just like about an hour before this recording, and it's basically Fall Guys. But man, it is fun on mobile.
I'm gonna play it.
Fun. Yeah, it's really good. So would definitely recommend checking it out. I think it's already in like the top 50 downloads and whatnot. But yeah, pretty sure Devolver is keeping a close eye on them.
The Devolver? It's
Mediatonic. Mediatonic, sorry, not Devolver. Yeah.
Nice.
Yeah.
Cool. Well, you wanted to end with some love. I'll end with some love cheesiness, Aaron. Looking back to the first half of 2022, there's a lot that's difficult in the world right now. Yeah, there's some difficult things that we need to cope with. And so games are super important. And so everyone that's listening that develops games, we deeply appreciate you. And you should appreciate yourself because you're helping us find just a little break. These 20 minutes that Manu spoke about to relax and stop thinking about everything that's going on. So yeah, hang in there, keep developing good games. And we'll do another episode like this towards Christmas to look back at the second half.
Mm-hmm.
I hope you like the fireworks.
Thank you. We'll ask Gavin to like put some sound effects next.
Yeah. Pew pew. Thanks.
Oh man, okay.
Thanks for joining, Aaron, Manu. If you want to join the conversation, you can find us on Discord. Sign up to the free newsletter of Naavik Digest, and we'll see you next week.